European stock markets are trading modestly lower this morning, with the UK's FTSE 100 index currently off around about 25 points, while the Euro Stoxx 50 index is lower by around about 11 points. Now, in the currency space, the euro is firmer against its rivals, and that's on the back of data yesterday showing that the region has emerged from a recession, a 6-quarter recession finally. And in the commodity space, gold is up around about $5 at the moment, whereas oil prices are nudging higher, with Brent up around about 83 cents, and that's on the back of the recent crackdown, the deadly crackdown by the Egyptian military forces across Egypt, killing over hundreds of people at the moment. And when it comes to bonds and core government bonds, we're seeing a bit of a moderation in prices. The 10-year gilt yesterday in the UK did push above that 2.6% mark, as investors were very much unconvinced by the Bank of England, Governor Carney's plans, his forward guidance measure, in which the market thinks that he won't be able to keep a lid on interest rates until 2016. Elsewhere, peripheral bond yields are a little wider across across all spreads, and in other asset classes we are seeing a pretty negative tone seeping through on the back of some the weak overnight leads in the US and in Asia. Good morning, I'm Ishaq, Siddiqi, and welcome to your Daily Market Bite. I'll give you a quick crackdown of what's going on in financial markets today. So we have started off week in Europe now. Aside from the fact that we've had some good data out yesterday from the Eurozone and also from the UK, the UK jobs data was pretty strong yesterday, and it showed that we've got a continuation of momentum in the UK labour market, and also, like I said, the Eurozone GDP figures for the second quarter were also pretty strong, coming in at 0.3% on the growth side versus expectations for around about 0.2%, with Germany and France really emerging quite strongly from their recessions. That pushed the market higher yesterday, got the stock indices flirting with 5-year highs. However, the rally has failed to gain momentum in Thursday's session, and that's mostly on the back of the fact that investors are very much coming to the conclusion that the Federal Reserve will start the initial tapering process in September. Now, that's ahead of a wealth of US economic data out today, which should invigorate the market, and investors are somewhat cautious before that, not really getting involved before the data. Some of the data points to include later on in the session are, I'm just going to have to read this off. We have industrial production out from the US and the Philadelphia Fed survey. We also have the NAHB housing market report, which will very much be in focus. Now, again, if these data points are very strong, it would build a bolder case for the Fed to start tapering in September. So really the market right now is analysing how or what sort of prospects and implications there are after the Fed starts tapering. So a bit of rebalancing and adjusting of portfolios is what we're seeing right now. There's not much out on the European economic agenda apart from UK retail sales, which are out soon. And elsewhere across the globe, like I said earlier on, Egypt is very much in focus after the deadly crackdown by the state military. That's caused a big outcry across the world, with many leaders condemning the action by Egypt, and it's also seen the resignation of Egypt's foreign minister, who has opposed the military's crackdown. Other than that, not much else to say, so I'll see you guys tomorrow for another Daily Market Bite. Cheers.